Welcome to the coffee shop, everybody. This is your host and barista. The Heikin Ashi algo is simply a beast of an indicator. So I put together a massive lesson plan with a group called Trade with Confidence. You can get a link to their Discord in the description below. In this video, we are continuing to discuss the secrets of the Heikin Ashi algo, finding support and resistance using the actions of this tool. Right, my uptrend. If I draw this on price, this becomes a support level, right? Go to the close of this candle, to the close of this candle. That's a supporting area. I want to stay away from that. As long as I'm above that, I'm good. You can find a resistance area way over here that matches the algo, you know, just for this little zone that it's doing. So what I'm doing here is all I'm doing is I'm looking where did I lose resistance? I got nice solid support. Where did I start gaining resistance? That's it. That's all I'm doing, right? And that's telling you, okay, I've got, this is a supporting price level. There, supporting price level. Now the next question is like, which ones do I draw? Well, you draw the ones that came after a nice run. That's it. If you got break of structure on your price, look back for where the support took place. All of this drawdown, this is actually buying pressure, right? Buying pressure. This was buying pressure taking over. Even though price was falling, it was still buying pressure, more buying pressure, and it caused this to take place. Draw it out and look to your right. You'll find another support zone. So this is telling you, hey, as long as you compare me to price action and then drag me out into the future, I'm going to show you where you have your support. And it happens, I don't know, how much later? This is a 10-second chart. And it's showing you support, I don't know, 67 minutes later, an hour later, or an hour before it even took place, okay? There we go. So we got that one. So key thing about the ribbon is to note where are your flat zones, right? Flat zones mean major support. Red flat zones mean major resistance. Just compare your price action to what's happening, right? If you're already at a high breaking previous structure and you've got this flat area for the red part, you've already broken structure. If you got this flat part, then you have to be careful, start pulling out of your trade until you start getting, support, right? So let's see here. Flat part, let's see. Flat zone, switch colors. Okay, so I covered the switch color as well. The switch color is just that right there, where it starts changing colors. Okay, support, and this is where resistance starts taking over. They start taking over this length here, right? This length here. That's literally just the momentum carrying over. That's all it is. Okay, before one before one takes over the other. Every time there's a switch in color, right? It doesn't always happen the same time the other one is at a loss. Okay, it doesn't always happen that way. Like this one takes place here, a couple of candles later, you finally get a loss of resistance. So the switch is here. This is just telling you, hey, you're about to get a loss in resistance because you're gaining support. You're about to get a loss in support because you're gaining resistance. It's turning into resistance. So it does a good job of telling you, like, way ahead of time, what do you need to watch out for? All right. Switch colors, range expansion. Okay. Range expansion. Very simple. Like I said, you can use this like a money flow index, kind of like that, right? If you're in an uptrend, you want to see larger growing green areas, right? If you're in a downtrend, you want to see the opposite. So here's the expansion. You have an uptrend taking place, right? Green area smaller than the previous one. This is basically telling you, hey, I used a lot of support to make this move. Now I have a little support taking place, right? You're simply looking at when the color switches. What was the majority, like what was the size of this? I know it's very visual, sounds really weird, but it's very intuitive, okay? This area that it just created, the preceding green area, is smaller by expansion, right, of the previous one. So you're going to get support here, leading forward, but it's not going to be as much. So price is going to move a lot less fast than this, okay? And then you get this larger red area, but you are in an uptrend. You're not really concerned about the pushback, okay? You're only concerned about the long ones. It's not until you're in a downtrend, right, that you want to see when you're getting more than or less than, right, of the preceding. So I'm in a downtrend. Let's draw that like a downtrend there. Somewhere it starts, you get, right, a little bit of red, more red. It's just growing, right? You can see that it's still growing. This is telling you coming up, okay, this activity that takes place here, right? If it's taking place and getting larger than the previous one, it's telling you that in the next push down, I'm going to have a faster move, right? And then here it's smaller. So it means in the next push down, I'm going to have a lesser move because this one is less than this one. What it's doing is it's measuring the amount of the selling orders, let's say, the amount of gas pushing down at this point. When gas pushes, when the price action pushes down here, it doesn't happen right away. It happens later on in the market. So when you're observing these larger and smaller areas, you're just comparing them to each other. Always compare the current to the previous. What am I doing? Am I bigger than this one yet? I am? Great. I got a big move coming up to the downside. So that's when you can start targeting things that are further away. You know, I don't know, raise your tick value. If you're going for 10 ticks, go for 20 ticks, 15 ticks, whatever you want to do. There we go. All right, so what else we got here? So that's the range expansion, range contraction, basically the same thing. Heikin Ashi candles. Let me tell you a little secret about the Heikin Ashi candles, okay? Short-term trend termination, right? Short-term trend continuation, right? So that's, I'm going to turn off the ribbon, okay? Because we don't need to see it for this. No ribbon. We're going to use the candles, all right? And I'll use the regular candles, okay? I have a custom coloring for the candles because it's my custom calculation, all right? It is not calculated like regular Heikin Ashi candles, and I know that it's supposed to be a representation of the RSI. That's fine. But you'll notice that the RSI keeps plotting certain values, and the Heikin Ashi candles don't always. So like this is the closing value of the RSI, right? But the closing value of the candle is here. Same thing here, same as the RSI, closing value of the candle, and that's the RSI. So you can see the difference that's taking place, right? What I'm doing here is I've created a different calculation to help you understand that you are either still in your move or that you have an interruption in your move or that your move is reversing, okay? Now, this part is a little, you got to be quick with this one, okay? You don't need to see the moving average. All right, this is really about the RSI and how it relates to the algo itself, right? Now, the way it works is like this, a very simplified form. The RSI should always be moving faster than the candle every single time. Now, that means on the upside, right, on the top of the on the top of the oscillator, your RSI should always be ahead of your candle, okay? And on the bottom, right down here, below zero, the RSI should always be below the close of the candle, should always be there. If it's ever interrupted by the RSI, like if the candle closes through the RSI on the bottom, then that means the momentum is pulling back faster than the candles can keep up with. So they're going to get interrupted. Now, just kind of draw this out. So it's almost like looking at two moving averages. The RSI is a very fast one, and the Heikin Ashi candles are the slightly slower one, okay? And I'm not big on moving average crossover strategies at all, but I implemented something like this in the calculation to tell you when you have a reversal coming through, right? So on the bottom, you should have an RSI that is lower than your red candles. Here, you can see at this point, it actually plots, right, higher than the close of that candle. So when this candle closes, it should immediately tell you, do two things, okay? Do two things at this point. One, what does this candle look like? Is it smaller than the previous candle? Okay, answer is yes. Okay, what does this candle look like? Is it smaller than the previous candle? Answer is yes. Okay, you can literally step in and say, I am not going to take a short after this candle. I am going to take a long back to some type of resistance level, right? Pushes down, pushes up, and you have closing value pushing below the previous one. So the open of this candle would be my target, right? The open of that candle. We just talked about how the open of a candle determines the break of structure, right? Talked about that
All right,
earlier.
guys, when it comes to the Heikin Ashi algo, there's a lot to unpack because it is very versatile and you can use it on many different time frames and trading styles. So make sure to watch this video, add it to your playlist, and watch it over and over again. Feel free to stay in contact with me, and I think there's just one more lesson coming up. Peace out.